Good evening. This is Ken at Tortoise Capital with a review of the weekend trading report for March 28th, 2020. Market remains in bearish volatile in spite of having the greatest week since the Great Depression. Everything has moved up into neutral, the low end of neutral, longer term, and then the high end of neutral for the 3 and the 10-day look back, but we're still in dangerous territory here. Price relative to the 200-day moving average remains red bearish at minus 16%, so we're 14% into the bear. ADX has rolled over a bit. It's still at an amazing 43.4. The risk Z is the 30-period moving average of the VIX divided by the 10. That's at 0.72, so we're deeply into risk off. That's a Z score of minus 2.75, so still abnormally volatile. Although you'll notice that having gone to 4 and then rolled over, as we called earlier this week, a marvelous opportunity for measured swing trading, as the market then turned in a 13% gain for the week. So still cautiously optimistic on the long side here, but we're still deep in the Mirkwood right now. Blended monthly rebalancing protected pretty well. Next reevaluation due next week on 1 April. I wouldn't be surprised to see no change to any of those. These are the current leaders in the clubhouse, although I think they're still under their 40-week moving average, so there won't be. They'll be in cash. Theoretical exposure of ETF2 is also at 0%. Monthly market health check, an amazing monthly move. You can see we got beyond a Z3 excursion. This is a market that moved from plus 3Z at the peak to minus 3Z and beyond at the in the abyss. This is what it looked like back when Trump was elected at around 185, and that was only an adverse 1 sigma, and then turned in this leg, shock, and then recovery. But this one in 1.5 months has sold off almost 7 sigma. It just barely dipped into the fall on MACD histogram. Upside is Z minus 1, 0, plus 1, which also coincides with the hump of the dragon, and then the PSAR flip. Previous PSAR flip is right here, and then the peak. So not out of the woods. Weekly market health check, an amazing last week, went from about minus 4 sigma to about minus 2.2. This is the previous belly of the dragon. That's a strong resistance. And then the weekly high gets us back into the floodplain. Then Z1, Z0, along with fair value, Z plus 1, and then the previous swing high. We are in the winter. Just entered the winter on the weekly, so not out of the woods yet. 10, 20, 30, 40% sell-offs. We closed at a 30% sell-off from the swing high. We have moved from winter into the spring on MACD 4 Seasons on this nice, amazing rebound. We just have the RLXD now. This will be a PSAR flip, provided we get any kind of continuity next week. So that's an owl pattern ready to go. When it takes out this solid green line, that's the owl buying pattern. We finished with a doji and an inside day, and so watch for this thing to take off. Here's the 1-day, the 10-day, and the 30-day ranges. On the downside, we have strong support here at the belly of the dragon, the belly of the 10, the belly of the 30, and then the ultimate swing low down here at 215. Upside, we have the 1-day and 10-day highs. Bollinger Band mean. This one is a previous swing low in the RL10, and also the about Z 0.5 fair value here, Z1, Z2, and Z3 well off the chart. Speaks for itself. Notice the strength in industrials, real estate. That's what I don't understand. Energy, utilities. Financials did not do as well as the basic materials, so I think this is maybe it's more of a Main Street sell-off. I guess nobody really thought the banks were going to be in danger, but the industrials, it was open to possibilities. The real estate still strikes me as odd. Commercial real estate I really worry about, though. That's the guy that's stuck in the middle of receiving rent from his retail clients and having to pay off the bank. So that guy's health is going to be key. It's going to come down to is there going to be a commitment to supporting the renters, the retail customers. We'll see. $1,200 one-time payment isn't going to do squat for that. The 32 ETF portfolio, more of the same. Sector spiders and the ETF max. Palladium, high yield municipals. That's part of the commitment to support local and state governments. That may be one to really take a look at. Getting some guaranteed income and the nation protecting it. Let's take a look at that one. HYMB. Should have been on that sooner. All cash and ETF2. The S&P at 54 is stronger than EFA at 50. It's gold and treasuries. All defense all the time. Things that have given up. Technology suffered and moved from great to just good. New emerging strength here, all the defensive plays, now that they're going to get their bailout. Hey, let me ask you, why isn't every healthcare worker and student loan being forgiven, being formed into a national union with bargaining power and a single federal license that gives you portability of jobs and continued support to positive education? Those guys ought to be in a union, have a real voting block in order to offset pharmaceutical and insurance industries. That just is a no-brainer to me. I guess we couldn't find in a $6.5 trillion bailout bill, we couldn't find enough money to forgive student debt of the people who are saving our lives. Shame on us. End of political rant. Back to the daily report. You've seen all this. 10-day max pains. Walgreens, Walmart, Boeing, AT&T, Chevron, Devon Energy, Halliburton, Mexico, oil and gas exploration. Some amazing gain stats in here, extremely large, not surprising. Coke and Walgreen setting up well on the auto framer. In the ETFs, it's oil and exploration. Big gains down here in the defensive plays, gold, silver, Japan. Japan I really like right now. Treasuries and real estate. Real estate just hard for me to understand why. But I'm going to be playing that tactically. Pinch and stretch. This used to be 8 sigma off, so it's recovered 4. But these are intradays, starting them intraday before we get long. Auto framer, oil, Walgreens, Walmart, oil and exploration, and Coke. I'm going to go set up each and every one of those. Friday was an inside day, so lots of squeezes and standard breakouts, giving you some amazing swing trading one day at a time opportunities. I'll cover that in the strategy podcast for subscribers. Everything pretty much is shifted over into daily springs. There's a decay in volatility. You can see the laggards in the winter, and then the leaders in the spring. So Cisco, Intel, Dow, Cat, and U.S. Steel kind of leading the way in terms of turnaround. That's the way I'm looking at it. I'm finding the ones with the highest Z-score in the spring. So Japan, Tech, EFA, metals and mining, finances, and UDOW. So that's going to be the area that I'm really concentrating on. Travelers, Home Depot, Nike, Travelers deserves our attention. Treasuries, Japan. Japan, that's interesting right now. You saw it on the speed run, those of you that took a look at that. Nice recovery. It has crossed over its 10-period moving average on that slope stat. That's always been the sign of an important turning point. So that bears watching carefully. Measured risk. Extraordinary. But volatility peaking. Standard deviation of price of the last 30 days on a percentage basis. That's a volatility decay right there by both of those measures. This is ATR percentage. This is price percentage. Z-scores of the RL slopes. That thing got minus 11 sigma. You don't see that every day or this century. Wow. Remember that one. And completing the record, you can stop this and check. Swing Z-scores over the last 5 days. The strongest ones are, the biggest Z-score is the highest relative strength. It's the Dow. That's what they're protecting. In Japan. And the European large caps have some belief, but not the small caps as much. We will see you in the chat room. The Talent LMS is loaded out. I put the first 150 lessons in on the Strategic Systems course. And the early adopters are already taking advantage of that. Here's the Strategic and Systems Thinking course and all of the courseware. That's a gold mine of material over the last 15 to 20 years, but all of it updated and modernized. These are the courses: Coaching and Psychology, the Daily Strategy. This is the Coronavirus Live Case Study. So all of the nightly strategic podcast I'm documenting in there along with the follow-through so that we have a documented memory of how we survived and thrived in these perilous times. Flashcards is going to be one where it's a snapshot and then an immediate response to lock in key concepts. Dr. Morrison's 4X 0.8 is online and going. 4X 1.0 will be, I think, 1 June-ish, getting built out. You just saw the Strategic and Systems Thinking. The TC2000 is going to be where we show how to use the bundle. The 37 strategies for strategic thinkers, very specific ways to approach the market in a relaxed way. The first 50 nuggets, hat tip to Catherine, one of our black belts. This was work she had done. She was very strongly quantitative and then developed her intuitive, artful side and then combined that with some design thinking for her first 50 aha moments in the transformation of her trading practice. And she was kind enough to share those. So in the psychology section, we got that. I'm still building out the Tortoise Daily Report and the weekly report, so more details on how to read that stuff, kind of like a foundational. And then the boot camp course, I just think this is filled with so many goodies. These are, how to think about the ecosystem, how we do coaching. These are all focused lessons. They had 2 or 3 guys in each session asking foundational questions and locked it in with an intuitive, synthesized material, top shelf stuff. And then how we're developing core and turbo trades. the visual box trading you've seen me doing in the strategy podcast, and then the multi-time frame, multi-lens analysis, which is a systematic way of doing the monthly, weekly, daily, 2-hour, 30-minute chart review that you see me doing each day and then on the weekends, and how to draw those lines and how to develop a robust, integrated, top-down, bottoms-up view of the markets and the sectors, and kind of taking all the wishful thinking out of it and replacing it with plans and preparation. So really strongly, I love that course. It's making a difference in people's lives. So there it is. Thanks for your kind attention. We will see you in the chat room.